Hey guys, and welcome to the Working Money channel. I don't think it's any surprise the cat is out of the bag. RWA tokenization, or real-world asset tokenization, is unavoidable. And even the Securitize CEO Carlos Domingo says the same. Guys, we're in uncharted territories here when it comes to crypto adoption, when it comes to some of these real-world problem-solving cryptocurrencies like XRP, like Algorand, like HBAR, like Stellar. There's a lot of them, and they are changing the landscape. Right now, these cryptocurrencies are trading in a spec market, and the spec market pretty much just follows Bitcoin. I've got the XRP chart up here. In the moment, we are trading for profit, but down the road, there may be different applications for some of these cryptocurrencies. And so, part of it is, even though we can make money today trading cryptocurrencies in a spec market, how valuable are these cryptocurrencies going to be? And should we be hanging on to some of them for the future? I'm going to play you guys this clip of Carlos Domingo, courtesy of Subjective Views. Listen to this.
SEC member Hester Peirce was on our show just last week. She said the market is going to sort out the winners when it comes to this technology. How do you make sure that Securitize is one of the winners here?
Well, look, we have been doing this longer than anybody because we started the company in the kind of first wave of tokenization in late 2017, and we are the one that has first the most comprehensive set of capabilities and licenses to be able to tackle the tokenization problems, which are very complex. And second, we are the only one also that has institutional adoption. Our customers are the largest asset managers in the world, like BlackRock and Apollo and Hamilton Lane, KKR, etc., and that gives us a competitive advantage that now that there is further regulatory clarity will, probably ensure that we continue leading the industry as we've been doing it for the last few years.
I want to talk a little bit about the retail side of this technology. You probably guess I'm going to ask about Robinhood because the company's been pushing for broader adoption of tokenization. Earlier this year, Robinhood announced that some of its European-based customers could start trading tokens that represent shares of U.S. equities. Kraken and Coinbase are also talking about using this tech. How do you view their efforts specifically?
I think tokenization of public equities is a very interesting problem, especially when it comes to broaden the distribution, the access for international markets. I think that these early projects that have been announced, and some of them already existing, they're a bit misleading because they don't really tokenize the equity. They're just derivatives or wrappers that give you kind of price access, but not the real asset. So I think that we're in the very, very early days of deciding how the tokenization of public equities is going to happen, but I'm very excited about it, and we've been also participating in the space, and I'm very bullish about the potential.
Should those companies be allowed to release or offer these so-called wrappers?
Of course, if they do it in a legal way, there's nothing wrong with it, right? So I think that there's obviously some people that are playing regulatory arbitrage to create these wrappers in offshore jurisdictions to bypass US regulations. I don't think those should be allowed. But in the case that the wrapper is properly constructed and it follows with all the regulations and disclosures, there is nothing wrong about it. Whether the existing wrappers, all of them do that or not, that's a different question. But I think that people deserve to understand exactly what is that they're buying to make sure they know that they're not actually buying the real stock, that they're not going to get access to dividends, or they're not going to get voting rights and things like that when they're buying a wrapper, as opposed to when they buy the native tokenized equity from a company.
So you got to be careful out there. I mean, the tokenized RWA, the asset from a company, that is something that is immutable on the blockchain. But what Carlos Domingo is explaining here is that other companies, Robinhood, what they're doing is they're playing up the narrative of tokenized assets, and they're just offering their clients a product that is wrapped that isn't necessarily technically a tokenized asset. So that kind of goes into something else that I don't really want to discuss. The fact, though, that Securitize has been around for a very long time, and as he said, they've been tokenizing since the beginning, since 2017. The fact that this is just becoming more and more prevalent as more crypto companies upgrade their technology, and as they're hitting new milestones like Ripple, guys, it doesn't take a rocket scientist to see where this ends. This is a tweet originally tweeted out by digital asset investor Scott Melker, Andrew Parrish, and Tillman Holloway podcast, okay, from the Wolf of All Streets and Arch Public. Guys, here's what they had to say about Ripple and XRP and what they're actually creating, the conglomerate that is now Ripple and XRP, the building of the empire. Listen to this.
I think Ripple is on the forefront of that. I mean, look at what they're doing for Gemini's IPO. Yeah, I think they're giving them a $175 million credit facility. Is that correct? Did you guys see that story?
Yep, that's correct.
Well, Ripple announced this morning, 51 minutes ago, congratulations to Bullish on their successful IPO. And they arranged, Bullish did a partnership with Ripple, evidently, to where they've arranged for 1.15 billions of dollars of the IPO proceeds to be paid to them in Ripple's stablecoin. So, the fact that Ripple's out there doing this should not be surprising. They now have a stable coin. They're soon to have a banking license, I would assume. They own a large exchange in Hidden Road. I mean, it doesn't take a rocket scientist to look at the fabric that's being woven here and see what it looks like. I mean,
I haven't looked deeply into that, but as you describe it, it seems like Ripple is really skating to where the puck's at with the institutional and government side of crypto. Like they have the money, they have the power, they have the, I guess, regulatory clarity now. And as you said, they can actually utilize their own stable coin to increase usage of it for all of these purposes. It's pretty brilliant.
And they can cash their XRP stack in for stable coins. So it's this huge collateralized 21st century exchange that is now offering IPO services and payment through their stablecoin. That's first of its kind. It's like what's going on in Wyoming. No one's ever done that before. It's never happened. So it definitely deserves our attention.
This is what I've talked about liquidity in the crypto markets associated with equity IPOs, right? So, Bullish and Ripple doing some things. There's liquidity being passed back and forth there. Gemini taking a credit facility from Ripple, liquidity being passed back and forth there. There's new capital that's created literally out of thin air associated with Gemini's IPO that's happening momentarily. That's going to continue to fuel a move higher. And again, that to me, that's the reason why there's going to be a breakout to the upside that's going to be pretty extraordinary in my mind. You just can't continue to create and facilitate sizable amounts of liquidity that just goes nowhere.
So did you hear that? I want to play you guys just that little last bit again.
That to me, that's the reason why there's going to be a breakout to the upside that's going to be pretty extraordinary in my mind. You just can't continue to create and facilitate sizable amounts of liquidity that just goes nowhere.
They're building so much, okay, and they're creating an environment where all this liquidity is being built that you can't just harness all this liquidity and have it go nowhere. It's got to go somewhere, guys. There's got to be outlets for it. And so they're building it, guys. They've already set up the infrastructure. Ripple has been building. They have been acquiring. They have been creating a plan, RLUSD. That's just one part of it. Hidden Road, Medico, the custody portion of it as well. Now they're funding IPOs like Bullish and Gemini. And guys, it's all revolving around XRP utility over the XRP ledger because the exclusive blockchain that Ripple builds on is the XRP ledger. So there you guys go. When we take a look at an XRP price right now at $2.91, this is still just spec trading. If we do see the real world adoption, that's going to change. And for more information on where I think the market could go, follow me, patreon.com/workingmoney channel. I've rolled back prices to only $5 a month. You got to subscribe and stay subscribed, though, to lock in. So my idea is to cash out as much crypto as I can in a spec run. And, as we see the tides turn, to make sure I have a safety net, an insurance, if you will. I'm keeping some of my XRP for the long term, but if we do see another crash in the meantime, I want to have an opportunity to buy more XRP at a low price before that. I don't know if we're going to see continued momentum after the 4-year cycle. So I'm keeping track of all that at patreon.com/workingmoneychannel if you want to join me. Wanted to thank Subjective Views and Digital Asset Buy, and of course, Chad Steingraber for posting that. Guys, we also have clarity. So in terms of regulatory clarity, just yesterday, in the video I did yesterday, we had another clip of Cynthia Lummis saying we're going to see a framework for clarity occur hopefully before Thanksgiving. We also need the Clarity Act to come into law. This is Stuart Alderati from the Wyoming Crypto Conference, courtesy of Riz. Listen to this.
We need clarity. Lowercase c should not be controversial, right? And a lot of what we are trying to get back to is a faithful application of the law, because under the prior administration, they stretched the law to the breaking point where these issues were being left to be litigated in the courts and have various judges throughout the country make determinations.
And you know this firsthand.
And we know firsthand. We spent $150 million defending ourselves against the SEC's overreach.
Wow.
We won that case with some very foundational findings, like the digital asset itself is not a security, which is a foundational principle of what the Senate has proposed. But I think as I think about the Clarity Act or the Senate proposal, which eventually will be merged together, we need to create certainty for the innovators, we need to create certainty for the market, but we also need protection from regulatory overreach. Right now, we've got Paul Atkins, we'll soon have a new chair maybe, at the CFTC that are leaning into the industry, but that could change on a dime. So these laws are there to protect the industry, protect the markets, protect the consumers, but also protect us from regulatory overreach. I think that we have to be careful that we don't overcomplicate things. It's a very, very complicated industry. I don't know as much about the technology or the regulation as others on this panel do, but what I do know is what it means to stand up in front of very bad at this stage. What we need is clarity. We need simple, principled laws, which will then translate into rulemaking and regulation.
And that is basically all we need. We need simple laws, simple rulemaking. We need this to work, guys. We need to get crypto adoption off the ground in the United States. Now, luckily worldwide, companies that are partnered with Ripple like Temenos have expanded their partnerships, like this one with Cognizant. This is happening in Australia specifically. Today, Cognizant announced a strategic 5-year engagement with Temenos, a Ripple partner, a global banking and technology leader, to develop a market Temenos country model bank in Australia. So that's interesting. Temenos country model bank is an extension of its core banking platform designed to accelerate go live for financial institutions by providing pre-configured regionalized banking functionality that reduces cost and risk. Australian financial institutions face increasing regulatory complexities and legacy system inefficiencies that limit agility. By leveraging Temenos' cloud-native banking solution and Cognizant's implementation and market expertise, the Temenos Country Model Bank provides pre-configured frameworks designed to accelerate modernization while reducing costs and operational friction. As the preferred upgrade partner for Australia, Cognizant aims to further develop the regionalized functionality of the Country Model Bank, tailoring the core banking platform to meet the needs of Australians' financial institutions. So they're tapping Ripple partner Temenos to create this new model for a bank. And for those of you guys who do not know, Temenos has been partnered with Ripple for almost a decade now. They are the back-end solution provider for a lot of these banks to integrate these banks so that they're all interoperable. So some of the key highlights: cloud-native banking modernization, comprehensive Temenos software delivery, and market-ready core banking solutions. Here's a quote, guys, just down here. The expansion of our strategic engagement with Temenos is to accelerate banking innovation in Australia, integrating emerging technologies into core banking. Not only will this relationship add value for existing Temenos clients through product innovation and engineering, but it is also expected to create new opportunities, aligning with our strategic priority of building our banking solutions and portfolio in Australia. So that coming from Cognizant, directly partnered with Ripple partner Temenos. This just came out the other day too, guys. Ripple is proud to be a founding member of TRAM Labs, or TRM Labs, and their Beacon network, a first-of-a-kind real-time crypto crime response network working with industry and law enforcement. Beacon helps stop illicit funds before they exit the blockchain. So something that we definitely need, especially if you guys are keeping your cryptocurrency on the exchange, which you should not be doing. And I'm going to say that, yeah, that's my opinion. Don't keep your crypto on the exchange. Personally, I keep mine in cold storage. I do have an affiliate link if you guys are looking for a cold wallet storage solution. You can use my affiliate if you want. You don't have to use it. I use the Ledger Nano. I love the Ledger Nano. I've been using the products since 2017. Even if you do not use a Ledger Nano, and if you do not use my affiliate link, I mean, if you do, it's greatly appreciated. Obviously, every little bit helps supporting the channel, and I do appreciate it. But even if you don't want the Ledger, find something else. Find something that suits you. Find a cold wallet storage solution where you can custody your crypto, because if you do not have the keys Guys, it's not your crypto. Well, the Beacon Network is actually helping with online theft and fraud. Beacon Network is a real-time intelligence sharing system that helps law enforcement, crypto exchanges, DeFi services, and stablecoin issuers stop illicit funds before they are withdrawn. Built on the TRM Labs in collaboration with industry-leading players, it enables verified investigators to flag addresses linked to financial crime immediately, alerting exchanges and triggering risk-based responses. A critical moment for crypto security. And guys, Ripple is supporting this endeavor, okay? Crypto crime is evolving and fragmented responses allow bad actors to exploit gaps. Recent hacks show how quickly stolen funds can move. Exchanges, stablecoin issuers, and law enforcement need a coordinated real-time system to track and triage illicit assets before they disappear. And so I guess because Ripple has delved into many different verticals when it comes to different applications on the XRP ledger, I guess they have now joined the likes of Zodia, Custody, Crypto.com, Anchorage Digital, Bitfinex, HTX, Poloniex, OKX, and many others who are joining this endeavor to help prevent crypto fraud. So they're a founding member of TRM Labs Beacon Network, and there's another little video down here that I'm not going to play for you right now, but I will link it in the description if you guys are interested. Don't think for a second that we're not going to store everything in our crypto wallets. This courtesy of Subjective Views. This is the second person I've heard say that billions will have a crypto wallet on their phones overnight. And he says Charles Hoskinson was the first person to say this. Listen to this.
Wall Street's excited. They're going to tokenize a bunch of stuff. They're going to put it on blockchains. That's great. But I think Silicon Valley is going to be the distribution. In the next couple of years, Apple and Google are going to enable stablecoins and a crypto wallet natively in iOS and Android. So kind of sort of overnight, 6, 7, 8 billion people are going to get a crypto wallet in their phone. They don't even have to ask for it. It's just going to be there. And there's going to be APIs in the operating systems for every single application. Telegram, WhatsApp, Facebook, you name it, is going to be able to tap into that API.
Is it happening more quickly than you thought, slower than you thought, or as you thought?
I mean, look, if you asked Kyle of 8 years ago, would crypto be like mature 8 years later, I would have said yes. And I would argue crypto is not really mature today, so slower than I would have thought. But I think a huge part of that has just been regulatory, which you could never forecast. Genius happening has changed a lot of things. Even 30 days ago, it was like illegal for anyone in Silicon Valley, like any of the big tech companies, to actually do anything productive with crypto. That is no longer the case as of roughly 30 days ago. And I think once those guys flip the switch, that's when this goes truly, truly, huge.
So yeah, the switch has still yet to be flipped, but as you heard it here, it's a regulatory hangup. We have not seen the regulatory clarity. Well, now we're starting to see it, right? Kind of creep in. It's coming in drips and drabs. But guys, the real big money has still yet to come in. And apparently the Bank for International Settlements did state that ISO 20022 has seen a critical infrastructure update. Okay, this was put out by Smoke. The ISO 20022 is seen as critical infrastructure, not only for banks, but for CBDCs, digital asset networks, and alternative payment models. And recently we did just get news from the Federal Reserve Financial Services. This is a huge deal for companies that run systems interacting with FedNow. But for crypto, it's a nothing burger. This, according to Vincent Van Code, until a company or system that provides payment needs to hook into Fed payment systems, ISO 20022 messaging standard is not applicable. No crypto as of 2025 is ISO 20022 compliant. In fact, the messaging payloads have absolutely nothing to do with ISO 20022. It's chalk and cheese. I've never heard that term before. It's chalk and cheese. I know Smokey and the Bandit is going to something himself now. Well, guys, that could be changing very, very soon. Here's the article, by the way, which I will link in the description of the video. Not going to go over it, but I kind of wanted to address that point because apparently King Solomon found a breaking document. ISO 20022 crypto upgrade has now been confirmed. So full credit to King Solomon on this. I want to bring up some of these papers that he found. Okay, first let's talk about T2 related messaging required updates. This is coming in June and November of 2026. He looks specifically at the 1374 update financial instrument quality type to report on digital tokens in reporting messages, okay? This is to align the securities messages where this change has been made, part of the previous ISO maintenance release. And guys, this is specifically for integrating digital assets. The exact thing that Vincent Van Cote here was saying was a nothing burger. And, in terms of this particular upgrade, okay, maybe this is a nothing burger, but guys, we do have confirmation here. And I do just want to play you a little clip from this King Solomon video. Change requests from central bank is in the Euro system. Digital tokens and blockchain wallets are built into a 2 trillion euro market day. Target system, the backbone of Europe's financial plumbing. Flows worldwide are happening via ISO 20022.
Digital assets have emerged as a new security type, states right within the document. And T2S messages must be updated to include blockchain addresses and wallet identification. It goes further in the 1374 section. Here, ISO messages are upgraded to a new data type that includes a token unit field with explicit rules for digital token unit and usage. In plain English, ISO 20022 messages can now report securities and balances in tokenized units. Why this matters, why this is such a big deal. This isn't just crypto, influencer or big account narrative hype about 7 or 8 different tokens. It's that, which is a nonsensical viewpoint. It's much bigger than that. T2 settles around 1.8 trillion euros every single day. T2S Securities processes about 700 billion euros every single day. TIPS, instant payments, can handle tens of millions of transactions per day in under 5 seconds. These are the financial backbone of Europe, and now they're being upgraded to handle digital tokens and blockchain wallets natively.
This is a huge deal. ISO 20022 crypto upgrade looking to be able to handle digital assets and digital tokens natively. This is essentially what we're here for, guys. The digital revolution. A concerned observer here commenting on King Solomon's video here. So he says this aligns with the narrative that they are pushing to get everything integrated and trackable. But the question is, what does this translate to in terms of long-term value? If it's not all down to 1 or 2 blockchains, meaning all this value is spread around, what are the realistic price targets? Also, there have been notable people that have said 99% of current cryptos might die off. So is there a chance that many projects will be killed to reduce dilution of value across to many projects? And this is a very good question. I mean, I personally think, the main projects that we see, the Ripples, the Stellars, the HBARs, the Algorands, maybe a handful of others, are going to do really well. I think it's kind of like the dot-com boom, where we do still have a handful of companies that did do very, very well. And, you could have picked any one of those companies back in the late 90s, early 2000s, invested in them, and you would be a multimillionaire today. Same thing with cryptocurrencies, of course. Not all cryptos are created equally. Which ones are going to die off? Which ones are going to stay for the long term? Follow me at patreon.com/workingmoneychannel if you want to hear my thoughts on this current crypto market and how that relates to the real world utility moving forward. And if you guys are interested in helping support the channel maybe in a different way, every little bit counts, guys. I'm offering 15% off Working Money Channel merchandise until the end of the month. Link is in the description of the video, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.